Here we have the 2-hour price chart from MicroStrategy Incorporated, stock ticker MSTR. Here we can see that the stock is mostly continuing on its downward slope. We're sort of rolling over here from the lower high that has been generated during the middle of the June trading period. A lot of these declines were expected. If you've been watching the prior videos, you would note that the prior level of support that we were pointing to really came in just below 1330. We can call this roughly 1327.50. And now we have seen, an actual break below this level, below the support level. So this is a significant development, and it does suggest that we are most likely in store for lower prices here. Overall, this is not entirely surprising for a few different reasons. We've also got the fact that Bitcoin prices have been trading under a significant amount of selling pressure. For people that are not familiar with this stock, MicroStrategy is currently being used as a stock market proxy for the purchase of Bitcoin. There are some people that, for whatever reason, don't want to buy Bitcoin directly, and they use MicroStrategy as a proxy to achieve that exposure. I personally don't think it makes a lot of sense. I think that you're paying a bit of a premium for the Bitcoin itself, but some people feel more comfortable buying a stock rather than buying a cryptocurrency. And for this reason, they focus on MicroStrategy as one of the outlets to do that. It is important to note, though, if people are looking at things in that manner, if you're looking at the stock market in that way as a potential proxy for cryptocurrency purchases, it is important to note that there are other ways of playing Bitcoin exposure other than MicroStrategy. Coinbase, for example, would be a fairly obvious choice. When Bitcoin tends to rise in value, Coinbase stock tends to go up because there are generally more fees that are associated with those transactions. And Coinbase is a primary beneficiary. So, at least people should know that there are more options available. And it's not simply MicroStrategy, because all MicroStrategy is really doing is purchasing the Bitcoin for you. So as we can see here, these latest declines are not entirely surprising. We have been expecting to see this. If we look at the relative strength index, we can see that the momentum indicator is pointed in the downside direction. So we have increased momentum in selling pressure for the 2-hour time frame. Currently, the major level of support that we were watching has been broken, and this does start to target now the lows from May 1st, which came in just above 1,000. We can call this, just above $1,010. So slightly above 1,000. One other thing to note for this stock is that it tends to move in $1,000 increments. The prior all-time high came in just below 2,000. This would be the March 27, 2024 trading high, which came in at $1,999.70. So $30 away from $2,000. After posting this high, we saw fairly stark declines here. We dropped almost $1,000 to just above the $1,000 mark. So this is significant because it really shows that the stock moves in big round number increments. And this can be used for potential trading positions going forward. For example, if you were long the stock and it's approaching the $1,500 level, you might want to consider closing that position because the stock tends to have turning points, near these big round figures. So that is something to keep in mind going forward. Overall, it has to be noted here that the downside trend momentum is in agreement with the price action itself. We're seeing a series of lower highs here, and these are being, this has been confirmed by the indicator reading. And in previous videos, we've pointed out the fact that MicroStrategy was kind of falling victim to this bearish divergence condition that was present on these longer term timeframes. So specifically what this means is that, we had prices moving to all-time highs here, and then as this was occurring, the indicator reading itself was moving lower. So the indicator reading is trending to the downside while the stock is moving higher. That alone is a bearish divergence, and it suggests that the current move in share prices is not sustainable. But even worse than that is the fact that this move higher resulted in all-time highs. So what you're seeing here is that the stock is trading at what can be considered to be excessively high values, highs that have never been seen before in share prices, and then at the same time you're posting a bearish divergence in the indicator reading. So all you take all of that together, and it does not spell a sustainable bull rally. And if you're in a position like that to the long side, you really want to be considering closing that position because you could be reaching a turning point really any time. I mean, it could happen at any moment. So as we can see, that did happen here. We did see this declining in price of nearly $1,000, and then we did form some strong support just above the $1,000 mark. So we've lost some shorter term support levels here at roughly 1330. We were expecting this because we're currently seeing lower highs, and the indicator reading continues to show a bearish downside movement in trend momentum. We're also trading below all of the exponential moving averages. So we really do have to focus on the downside here. And the clear target here does come in at these March 1st lows, because in addition to the fact that this is a historical price zone, we also have the fact that this is the 61.8% Fibonacci retracement of this broader price move. And this is the price move that resulted in the stock's all-time highs. So this isn't something that you could just ignore, or this is really something that needs attention because this is clearly an influential price move, and we have not yet retraced all of that price move. So in my view, these dominant price moves tend to continue influencing markets until one of two conditions take place. You either retrace the entire move and you recover all of the trending price movement, or you break to new highs if it's an uptrend. If it's a downtrend, you would break to new lows. So one of those two conditions would have to take place, and neither of those things have happened yet. So as long as prices continue moving lower here, I would expect to see a downside retest just above 1,000, which is a fairly substantial move lower from here. We're currently trading just below 1320. So we've got a significant price move lower before we can expect to really see a bounce. Overall, this stock would be expected to track Bitcoin prices. So one event that could dismantle this outlook or change this outlook would be if we were to start seeing rallies in Bitcoin. If that were to occur, we could start to break to new highs here and possibly remove this downward sloping trend movement in MicroStrategy Incorporated, stock ticker MSTR.